Ladies and gentlemen, hello, and thank you for tuning in to this evening's broadcast. This is Christopher Aaron. We are looking at something fairly serious happening here in the value of the US dollar. Today being the 24th of January, 2018. The dollar is melting down in front of our eyes. We've been covering this, we've been predicting it for over the last year. Let's put this into perspective and see what's happening. And if you're new to the precious metals, just understand that the reason why gold and the US dollar tend to move inversely, they tend to move in opposite directions, not all the time, but most of the time, is because when world reserve currency holders, being US dollar holders, are seeing the value of the dollar go down, they are looking for protection. And gold is the ultimate form of protection from fiat currency. So this will explain a lot of what we're seeing in the charts coming up here. Of course, this service is focused on the charts. So if you do not like to look at charts, then please find another channel that focuses on the fundamentals. But as we've seen from 2011 through 2015, as gold and silver fell 45% and 70% respectively, if you're focusing only on the fundamentals, you are going to be wrong a lot of the time. So we are looking at the US dollar index here. This right here in the middle is the US dollar index. We're looking at the dollar, the relative value of the dollar versus a basket of other currencies, including the British pound, including the euro, including the Canadian dollar, etc., etc. We're looking at that value here as it fluctuates throughout time. And at the top here, we are looking at the momentum. This is how strong the dollar has been moving in its momentum in any direction, either higher or lower. What can we see here is that in 2015, this indicator registered the most overbought that it has ever been in over the last 30 years. So the most overbought, in other words, this rise was so strong without a pause or a correction that it was suspect. Anytime you see a market moving straight in one direction, that is not a good sign from a technical standpoint. So we've been making videos, we've been watching this for the last year, year and a half. And if you're just saying, well, now, oh, you're only calling it now, I just want to rewind a little bit and show you a few of the things that I have been publishing over the last year or two. This article, I do publish articles like this on goldeagle.com, where I'm an editor for the site. This article was published right here. US dollar is forming a long-term top. This article, US dollar weakness and implications for gold, was published right here at the beginning of January 2017. And let's get rid of those. Suffice it to say that we are now seeing this meltdown here happen in the dollar, basically really collapsing below this very key support level here that we've seen between 91 and 92 on the dollar index. A clear breakdown this week. What was the fundamental cause? The Treasury Secretary coming out today and saying that he believes the dollar should be weaker to support U.S. trade. But the point is that we were predicting this back here in the upper regions of this 8-year move. And the charts can show you what is happening before the fundamental news actually comes out. That's the most incredible thing about technical analysis. So what do we expect for the dollar going forward here? I do not think it's going to completely collapse in a single direction right in front of our eyes, but we are definitely looking at a long-term top. This is the important thing to keep in mind here. This top was more overbought than this top in the year 2000, 2001. And the decline that started from this top corresponded with gold moving from $250 an ounce up to $1,000 an ounce. So if this was more overbought than it was in 2001, and we're getting an even more strong reversal coming down, the best assessment here is that we're going to see a bit more weakness over the next few weeks, few months, and then something of a rebound later part of this year, perhaps into 2019, and then a seriously strong decline. This is where the mainstream media will start to pay attention to this, I suspect. Followed by probably a pretty rapid rebound once again as we are testing these all-time lows between 72 and 74 on the index. And according to my work, this decline, which has now started, which we were writing articles about here at the top, this decline will be taking the dollar to new all-time lows versus major world currencies. And this will set the backdrop for the mania that we are predicting in precious metals and hard assets into the next decade. Notice, I'm not talking about this happening. I'm not talking about a mania. I'm not talking about gold going to 2,000 or 3,000 or 5,000 this year. We'll look at the gold chart in just a moment. But this is what is setting up for the US dollar. This should be the backdrop. We're talking about the most overbought that the dollar has ever been. Even a more unsustainable advance than we saw here in the year 2000. This is just getting ready. The bulk of the decline has not occurred yet. There were a lot of people that were doubting that call when I made it back here, and we're seeing that happen now. Let's continue to watch. We'll be getting into the premium service in a lot more detail about the short-term twists and turns to expect for the dollar. Now, looking at gold and silver over the last few days, and I just did want to take a moment to mention, if you want to save $10 off of an order of gold and silver, there's a coupon code below to try bullionexchanges.com. This is a dealership that I know. They're located in New York City. I trust them. I know the owner. I know the shipping department. You can save $10 off an order of $300 or more. Try it out. See if you like them yourself. That's it. We look at the precious metals. Here's the rise that we saw today on the all-out collapse that we've seen in the US dollar. It's really not looking good for the dollar at all. And so here we see the rise inversely in gold. And let's take a look at silver. Great pop in silver, but still failing to close above that 1750 region. You know, we've been looking at that region very closely as a interim resistance level. 1750 failing to be overcome here, so it's still leaving the door open that this could be a medium-term top here in the metals. Now, a warning sign that we are seeing, for example, in the mainstream press, this was from Yahoo Finance today. Take a look at this down here in the shading. 3 ETFs to buy on spike in gold investments. So why should we be so concerned, for example, over the short run? When you see a mainstream press come out and recommending ETFs to buy on the spike in gold, this is exactly the type of strategy that you want to avoid. You don't want to be buying gold on a spike. You want to be buying gold and silver when no one is talking about it. And the fact that we see a mainstream press come out like this at this peak and talk about these ETFs to buy, this is a warning signal. So anytime you see a mainstream press like that come out, you just want to think as a contrarian. Just remember, the mainstream press, they are momentum chasers. So they follow whatever's moving strongly. And generally, if the mainstream press is saying something about the financial markets, I'll say this, about the financial markets, it means that that market is getting a little bit too overhot in the short run. So I think we need to be cautious right now on the precious metals over the short run. Let's take a look. Here is the long-term gold chart. I like to bring the long-term chart up whenever people are getting too excited and also too fearful. It helps to bring up this long-term chart. Now, as a caveat, when we look at this, I just want to say, look, I am heavily invested in the precious metals. So if they take off from here, if they shoot higher, we've got this target labeled up here. If the precious metals take off and hit my target, over the next couple of months, I will be very glad. I mean, that will be great for my investments. However, for the health of this market internally, and if you are a long-term investor, or if you're just approaching this market, you should hope that this rally that we've seen, which we called as coming down into this retest zone 4 months ago, but this rally, you should hope that this backs off right here, right now, with this green arrow as an example, coming back into this retest zone, somewhere back around 1300, perhaps 1290 or so. There's some room in here for variability. You should hope that that happens. And that then, sometime in the second, third, or fourth quarter, we begin to really take off. Why? Because the phrase is, the longer the base, the stronger the move. And when you see a market that just moves higher, for example, let's say this market continues to move higher like this, like the red arrow right now, and it hits my target, let's say by March or April. This sets up the stage for a major retracement after that. This is how markets work. So we're seeing some of those warning signs here over the short run. I'm telling you that I'm prepared on a personal level for these markets to move higher. So certainly my personal investments, I would be happy if it moves higher. But from a long-term basis, as an investor and someone who studies these patterns throughout history, I will tell you, it will be a lot better for this market if it comes back down right now and then begins to make this move in the later part of this year. It will be much more healthy. If we see this move right now, it opens up the possibility, and I say the possibility, but it increases the odds that this entire advance from the 2015 bottom through whatever peak is forming here may be a bear market rally. And by that, I'm talking about, we had this 5-year downtrend, right? 5 years of falling prices. It was broken here just 6 months ago. Let's not forget that. If this market just takes off too quick, too soon, it opens up the possibility that this entire advance has been nothing more than a false move higher, and that gold may then have another several years to decline. So, once again, from the health of the standpoint of this market, and we will get into a lot more of the short-term twists and turns in the premium service. That's what we cover every single week. We look at the short-term charts as well. We should hope that this backs off now. There's these fundamental indicators like we've looked at, the Yahoo Finance article. That is the best assessment, and that would be the most healthy for this market. That said, if we get this back off, this is the time to be making your final investments in this sector, because we're seeing these hints. We are seeing the gold price. I mean, this rise out of the December low from 1236 up to 1357 today. What an incredible rise in just 5 weeks. 5 weeks ago, people were so bearish on this sector. It was incredible. People were throwing in the towel. I can't take this anymore. It's too much. Look at where we are 5 weeks later. So you're seeing the strength in the market. And I would just say this. If we get this back off over the next few weeks, several months, this is the time to be finalizing your investments for the move that is coming up. This is the time. We do publish this premium research service for that purpose. If you want to follow the exact investments and the exact trades that we are making here, you can find out more about that on the homepage. I also work with individuals on a one-on-one basis by phone, by email, by Skype. If you have a unique situation that you would like an independent perspective on, someone who will not simply tell you to buy, but perhaps you need to change your allocations, perhaps you should consider a different strategy depending on your situation. This is an individual researched strategy session. Thank you once again for tuning in. Watch that action in the US dollar. That is a horrible looking chart for the dollar. The last video we made on that, by the way, was on November 22nd. You can go back and watch that. But the dollar has formed a long-term top And the question now is really about timing. It's about what twists and turns does this take along the way. There is going to be a mania developing in precious metals at some point over the next 5 to 10 years. It will probably exceed that we've seen in the cryptocurrencies over the last few months, because this will be a worldwide fear-based mania, I predict. The only thing that's more powerful than greed is fear, and people will be fearing for their US dollar-based investments, and it will drive a stampede into the precious metals. It's really a question of timing, and that's what we look to cover here week in and week out. Thank you.